I think it's inevitable that the US is going into recession. In fact, it's probably already in recession. People look at the employment data without realizing the vast revisions that have taken place in the employment data. And if you look at the hours worked also, they're falling. You're beginning to see cracks in the employment situation. There's a report out the other day showing that job openings dropped to a 2-year low as number of hires quits plunge. It's going to take a catalyst for the market to appreciate reality, but it's coming. Whether it's coming from problems in the US Treasury markets, or whether it's coming from an external event, which could be any number of developments. For instance, Putin, rather like a heavyweight boxer, has absorbed a large number of punches, and he's probably going to lash out somewhere at some time. How, we don't know. But forget about nuclear war. That's just nonsense. Doesn't need nuclear war. He's got hypersonic missiles. Or you can see issues in the Straits of Hormuz, propelled by America trying to show that it's still got lots of weight and power to influence developments. Or, and I think this is a real wild card, there are all sorts of reports emanating out of the US Transport Securitization Association that a new lockdown in America is arriving. It'll start with masks being compulsory for key people like medicals, aircraft personnel, and whether it slowly moves into a complete lockdown or rapidly into a complete lockdown, I'm not yet sure. I'm just waiting for more information. So all I'm saying is that there will be some catalyst which will wake the market up out of its complacency. And when the markets start falling, which they will continue to decline, we've got a fall in the S&P of about 30% by the end of the year, stroke early next year. And once that happens, then the complacency of companies will flitter away. Hours worked, falling hours worked will be replaced by falling employment. And of course, that then has a knock-on impact. Add to all of that, lenders, whether banks or shadow banking, are tightening their standards. Even a large number, so I'm told, of claimants for unemployed compensation. Apparently, the latest take is that 32% were denied because they were false claims. So you're going to see a combination of manufacturing activity remaining weak. The US Conference Board's leading indicator in July was down for the 16th month in succession. Add that to tightening lending standards, and we will see America in recession by the end of this year. I don't think it will be a deep recession. That comes later, because the Fed and other G7 central banks will be forced to revert back to QE and to drop interest rates, as the markets will also, by the autumn, will start having to reassign the probability of war over Ukraine, that it's not going to be a benign outcome. So, troubled period ahead. The hangover will be relieved by central banks going full blast on opening credit taps. Inflation is going to reappear. It's falling at the moment. That was all part of our forecasts, but it remains sticky, because if you look at between 2014 and 2021, that 7-year period, central banks and governments unleashed $200 trillion more than the value of GDP. Once inflation starts to tick up again, a lot of that money will have to find a home. So we will get the second wave of inflation, and second waves are always much more severe than the first waves. And we have global inflation next year, by the end of next year, running at between 13 and 15% global, exacerbated by energy prices rising sharply because of supply disruptions, food prices soaring for weather and supply disruptions, weather because we will see either by the end of next year or early in 2025 the onset of the 89-year Glesberg cycle, which last created the Midwest Dust Bowl decade. So that's taking the world up to the end of next year. Many countries are already in civil unrest. That will get even worse when economic and financial conditions deteriorate. You could even say that in some countries you'll have civil war. And the probability is that, well, that's too strong a word, the possibility is that you will have a war between countries in the G7 against countries in the BRICS, i.e., the war between NATO and Russia will expand. There's little doubt that Europe's recession will deepen in the second half of this year. You can see it in the order books of some basic industries, falls of between 20 to 40% year on year. I think the bigger issue long term is the survivability of the EU. I think that's in serious doubt. You've got the Bundesbank openly saying, we've got our own problems, we're no longer going to be able to finance you guys. Politically, governments have to make the decision. We can't sit on the fence between the East and America forever. We've got to make a stance. Industry, particularly in Germany, knows where their future lies, which is eastwards, but the politicians say no. Interestingly, according to a recent study that was done by Kiev University, only 10% of German companies have actually exited Russia. The big names have left. The smaller brethren remain. And you have the same in China. The big chemical company is investing 10 billion. German industry is probably not going to leave China, despite what their political masters persuade them to do. So I think Europe really sits in the firing line between the East and the West. I think what it implies is probability you're going to see massive political change within Europe.